If you're a UK pensioner, you need to stop what you're doing and listen carefully. The Department for Work and Pensions has just announced significant banking changes that could directly impact how you receive your pension payments. These changes are already rolling out, and if you don't take action now, you could face delays or even temporary suspension of your pension payments.
I'm going to walk you through everything you need to know in the next few minutes, so make sure you watch until the end because I'll also tell you exactly what steps you need to take to protect your payments.
Welcome back to my channel, where I keep you informed about the latest changes affecting UK pensioners and benefits. If you're new here, make sure to hit that subscribe button and ring the notification bell so you never miss important updates that could impact your financial security. Today, I need to talk to you about something urgent. The Department for Work and Pensions has just announced significant banking changes that could directly impact how you receive your pension payments. These changes are already rolling out across the UK, and thousands of pensioners are already feeling the effects. What's particularly concerning is that many pensioners aren't being properly informed about these changes until it's too late. Some are discovering the new requirements only when their payments are delayed or suspended. This isn't just another bureaucratic change you can ignore. These new banking regulations represent the most significant overhaul to pension payment systems in decades, and every single UK pensioner needs to understand what's happening. Whether you receive the state pension, pension credit, or any other DWP benefit, these changes will affect you. The DWP is implementing comprehensive new banking verification rules designed to combat fraud and improve payment security. While the government claims these changes will make the system safer and more efficient, they're causing significant concern and confusion among pensioners across the UK. Let me break down exactly what's changing and why it matters to you. The first major change involves enhanced account verification procedures. Banks will now require up-to-date identity checks for all pension recipients on a more frequent basis than ever before. This means you may need to provide fresh proof of address, updated identification documents, and verify your account ownership multiple times throughout the year rather than just once when you first set up your payments. The DWP wants to ensure that pension payments are going to the rightful recipients and not fraudulent accounts that may have been set up using stolen identities. This verification process is much more thorough than what pensioners have been used to. You'll need to provide multiple forms of identification, and the documentation requirements are stricter. A simple utility bill may no longer be sufficient proof of address. Instead, you might need council tax statements, official government correspondence, or bank statements from a different institution. The DWP is also requiring that all documents be dated within specific timeframes, typically within the last 3 months. Another significant change is the complete phase-out of certain traditional payment methods. The post office card account system, which has been a lifeline for thousands of pensioners who prefer not to use traditional banks, is being eliminated entirely. If you currently receive your pension through a post office account, you have a limited time to switch to a proper bank or building society account. This affects approximately 800,000 pensioners who have relied on this system for years, many of whom are elderly or have limited mobility, and found the post office system more accessible than traditional banking. The transition away from post office accounts is particularly challenging for rural pensioners who may not have easy access to bank branches. Many of these individuals chose post office accounts specifically because they could access their money at local post offices, which are often more accessible than bank branches in rural areas. Now they're being forced into a banking system that may be less convenient for their circumstances. The new rules also include dramatically stricter monitoring of account details. The DWP will be conducting weekly rather than monthly checks to ensure your bank details are current and accurate. Any mismatches, even minor ones like a slightly different spelling of your name or an outdated address, could trigger immediate payment delays while they verify your identity and account ownership. This automated system has already caused problems for pensioners whose names appear differently on various official documents. Enhanced data sharing between banks and the DWP represents another fundamental shift. Your bank will now share detailed information about your account activity, balance changes, and any suspicious transactions with the government to verify your eligibility and account status. This means any changes to your financial situation, including gifts from family members, savings account transfers, or even changes in spending patterns, could be detected immediately and potentially affect your benefit entitlements. This data sharing extends beyond simple account verification. The DWP will have access to information about all accounts you hold, including savings accounts, ISAs, and investment accounts. They're looking for any signs of undeclared income or assets that might affect your benefit eligibility. For many pensioners, this level of financial scrutiny feels invasive and goes far beyond what they expected when they first applied for their pensions. The verification process itself has become significantly more rigorous and time-consuming. You may be asked to provide extensive additional documentation to prove your identity, residence, and financial circumstances. This could include multiple utility bills from different providers, council tax statements covering several years, medical records to verify your identity, or even sworn statements from neighbors or family members vouching for your residence. The DWP wants to eliminate any possibility of payments going to wrong accounts or fraudulent recipients, but the burden of proof now falls heavily on legitimate pensioners. There's also intensive new scrutiny on account ownership that goes far beyond previous requirements. Your pension must go into an account that's either in your name alone or jointly held with a spouse, civil partner, or in some cases, an adult child who serves as your official carer. Third-party accounts, accounts held by friends, or even accounts managed by other family members will no longer be acceptable for receiving pension payments, even if you've been using these arrangements successfully for years. This change is particularly problematic for pensioners who have mobility issues, dementia, or other conditions that make it difficult for them to manage their own banking. Many have relied on trusted family members or friends to help manage their finances, but these informal arrangements are no longer permitted under the new regulations. Instead, formal power of attorney or deputyship arrangements must be in place, which can be expensive and time-consuming to establish. The reporting requirements have been tightened considerably. You'll need to inform the DWP within 48 hours about any changes to your banking arrangements, compared to the previous requirement of 30 days. Previously, you might have had weeks or even months to update your details without affecting your payments. But now, even brief delays in notification can result in payment suspensions. This includes changes to account numbers, sort codes, address changes, or even changes to joint account holders. Additionally, there are new requirements for regular confirmation of your continued eligibility and circumstances. Every 6 months, rather than annually, you may be required to complete detailed forms confirming your living arrangements, financial circumstances, and banking details. These forms are more comprehensive than previous versions and require detailed explanations of any changes in your situation. The technology infrastructure supporting these changes has also been upgraded, which sounds positive but has created its own problems. The new computer systems are more sensitive to data mismatches and have stricter validation rules. This means that minor inconsistencies in how your name appears across different systems, or small variations in address formatting, can trigger automatic flags that suspend your payments until manual review can be completed. The timeline for these changes has been staggered throughout 2025, with different elements being implemented at different times. Some changes began in early 2025, while others are still being rolled out. The problem is that pensioners aren't always being given adequate notice about which changes affect them and when. Some have discovered new requirements only when their payments were suddenly stopped. The implementation has been particularly challenging because different types of pension payments are being transitioned at different times. State pension recipients might face certain requirements in March, while pension credit recipients deal with different changes in June, and those receiving both benefits have to navigate multiple transition periods. To prepare for these changes, you need to take immediate action on several fronts. First, and most importantly, verify that your bank details with the DWP are completely current and correct, including ensuring that your name appears identically across all systems. Check that your pension is going to an account that meets the new ownership requirements. If you're using any informal arrangements with family members or friends, you need to establish formal legal arrangements immediately. Gather all your identification documents and proof of address documentation now before you need them. Make sure everything is current and that you have multiple forms of each type of document. Keep physical copies as well as digital versions, as the DWP may require original documents for verification. If you're still using a post office card account, opening a proper bank account should be your absolute top priority. Don't wait until the last minute, as banks are being overwhelmed with applications from pensioners making this transition. Research which banks offer the best services for pensioners, including features like telephone banking if you're not comfortable with online banking. Contact your current bank to understand exactly what documentation they'll need for the enhanced verification procedures. Many banks are also updating their own requirements to comply with the new DWP regulations, so even if you already have an account with them, you may need to provide additional documentation or update your account status. Keep the DWP informed of any changes to your banking arrangements immediately. Don't wait even a few days. The new systems are designed to detect discrepancies quickly, and delays in notification will result in payment suspensions. Consider setting up multiple notification methods so you can quickly contact the DWP when needed. The government justifies these measures as necessary steps to reduce fraud and improve payment security. They point to statistics showing significant amounts of benefit fraud each year and argue that these enhanced verification procedures will save taxpayers money while ensuring that legitimate recipients continue to receive their full entitlements. Officials also claim that the new systems will eventually make the process more efficient and reduce processing times for legitimate claims. However, many pensioners and advocacy groups are expressing serious concerns about these changes. They argue that the new requirements disproportionately affect older people who may be less comfortable with complex banking procedures, frequent verification requirements, or digital systems. There are particular concerns about pensioners with dementia, mobility issues, or other disabilities who may struggle to meet the new documentation requirements or navigate the more complex verification processes. Critics also point out that the burden of proof has shifted dramatically onto pensioners themselves. Instead of the government having to prove fraud, pensioners now have to repeatedly prove their legitimacy and eligibility. This creates ongoing stress and uncertainty for people who should be able to rely on their pension payments as a stable source of income. These banking changes represent the biggest transformation to pension payments in decades, and every UK pensioner needs to take them seriously. The key message I want you to remember is this: be proactive, not reactive. Don't wait until your payments are delayed or suspended to sort out your banking details and documentation. If you found this information helpful and want to stay updated on pension and benefit changes that could affect you, please give this video a thumbs up and subscribe to this channel. Make sure to hit the notification bell so you don't miss future updates about these regulations as they continue to evolve. Share this video with any pensioners you know who might not be aware of these critical changes, because the more people who are prepared, the fewer will face unexpected payment disruptions. Remember, when it comes to your pension, it's always better to be over-prepared than caught off guard. Your financial security depends on staying informed and taking action before problems arise. These changes are complex and ongoing, so stay vigilant, stay informed, and don't hesitate to seek help when you need it. Thanks for watching, and I'll see you in the next video with more important updates about changes affecting UK pensioners.